Experts agree that US sanctions targeting Gazprombank represent a significant setback for Russia. The bank, previously the last Russian financial institution with access to the SWIFT system, will be fully disconnected from December 20, 2024. The only exception is transactions related to the Sakhalin-2 energy project, permitted until June 28, 2025. Gazprombank has played a crucial role in facilitating payments for Russian gas exports, handling dollar and euro transactions before converting them into rubles.
Gazprombank was the only Russian bank with accounts in US banks and effectively dominated the currency market for dollars and euros in Russia. This move raises questions about the continuation of European imports of Russian gas and oil. While supplies to India and China are likely to persist, the addition of 50 smaller Russian banks to the US sanctions list, previously used for foreign trade transactions, makes this the most severe economic blow so far.
Sanctions are expected to severely impact Russia's foreign trade revenue in the short term. This strain is already visible, with the ruble plunging to a historic low of 114 per dollar. Simultaneously, Gazprom's stock value dropped to nearly $1 per share, a stark decline from its peak, when shares were worth over 8 times as much. In an attempt to stabilize the financial markets, Russia's central bank announced a halt to foreign currency purchases on the domestic market from November 28 through the end of 2024.
The central bank is taking measures to reassure the market and maintain financial stability. Halting currency purchases sends a signal that the authorities are aware of the challenges and are working to address them. However, these measures are temporary, as the central bank cannot sustain such interventions indefinitely.
Stabilizing the ruble is only one of the many challenges facing Russia's government. The central bank is grappling with a projected budget deficit of nearly 3.5 trillion rubles for 2025.
Initially, the deficit was estimated at 1.2 trillion rubles. Now it turns out to be 3.3 trillion, nearly 3 times higher. To bridge this gap, the government will likely rely on the National Russian Wealth Fund. However, with only 5.2 trillion rubles in liquid assets available, using 3.4 trillion would deplete the majority of the reserves.
Inflation is accelerating across Russia, with prices for everything from food to housing surging. To curb inflation, the central bank raised its key interest rate to 21% in October 2024. This decision made mortgage loans prohibitively expensive, effectively freezing the housing market. Such economic disruptions are being felt across multiple sectors. The central bank's governor warned that additional interest rate hikes might follow. Reported by Bastun Katerina Yulia Granovska, UATV News.